All right, how many times have you found yourself continuously breakout trading and it works in your favor for a couple weeks, and then after a few sessions you're like, what the hell? My stop loss hit, stop loss hit, stop loss hit, over and over and over again, and you're just kind of scratching your head, unsure of what's going on. And you're scalping, and your scalping rages, buying support, selling resistance, buying support, selling resistance, until you're trying to sell that resistance or you're trying to buy that support, and then you're scratching your head wondering what is going on here. Today, we're going to be discussing the three modes, but primarily backtest mode. Okay, because backtest mode is one of those parts of the auction process that aren't really typically discussed that I've seen. I figured this is kind of my main operating system where I make most of my scenarios and theses from, price backtesting certain zones. So we're going to be kind of chopping up and breaking down where to find backtest zones, what backtest zones are, or backtest mode, and when is it activated. Because if over the course of the last few weeks, we've had quite the change in trend. So here is kind of an example of what it looks like on a just blanket statement or section. So I'm going to kind of cover what that is. Backtests come when there's an open gap that it's left, in other words. So just say price is trending. We typically, in order to validate a zone that we broke out of, so if we're consolidating and we break to the upside in this first scenario, typically price will cleanly backtest the prior highs, right? These prior highs that were formed before price deviated away from this auction. There are many times where price will break away and not fully come back, leaving an open gap, if you will, of price not having been validated, is what I like to call it. There may be different terms for this. By the way, none of this is new. This is just concepts that I've seen over the course of my trading history, trading over and over, that the auction, the way markets move, they have a tendency to revisit these zones that have not fully validated the auction. And so we're going to pull up a chart right now on the SPX to find these zones and kind of align this with some of the trading plans that I develop on Substack. And here's another one. So you'll see this, and this structure is actually what has happened over the course of the last 2 months also on the SPX. We have another range here. We go into chop mode. We break down after balancing for a period of time, and we leave this open gap here, and we do the same on the way down, leaving more open gaps in the auction process. So if we're looking at this and we overlay it with something like, let me pull it up, something like the SPX right here. Let's actually look at the S&P futures, because that's what I typically trade. This is what I'm always looking at. So we'll see here that we have the trend going, right? We have a phase one trend mode, right? Things are going well. And then we have chop mode, right? Just off the clean assumption here, we're not going to really go into this area. We can look at it later. Very obvious interpretation of what's happening here is we had a range. Price broke down, but we left a massive gap right here. We never came back to backtest this price, this range, right? This structure that formed, we broke down, we never finished it. We made a straight leg lower. So we're going to go back to this zone at some point to backtest it, kind of like what we did here, right? You see here a couple days later, these are 2 hour, 1 hour candles. So it took a couple days to finish this auction process. When we broke down, I immediately had an understanding that at some point down the road, we would come back to the zone to backtest. The question is, at what point is it appropriate to assume that a backtest is possible? And that's kind of the philosophy of my pre-market plans, the ones I generate every single day. So what we're going to do is we're going to dissect one of those plans that I took, a trade that I got long off of around here, with the assumption that we would at some point come back and backtest this zone. Now, before we jump in, just want to give some context here. We're looking at the action from that sell imbalance that happened here. This was about 6 to 7 day base. We broke down post a FOMC meeting back in December 18, 2024. So this is December 18th, the day of the sell-off, right? So as of this day, this is the day that I generated this newsletter on 12/18/2024. As a preface, I put in, now that we've been balanced after a massive 6-day base, tomorrow we can set up for some backtesting. If you are a fluent reader of this newsletter, you know that we When we immediately imbalance away from a range without backtesting a level, we are likely to mean revert to finish the auction. At this time, the imbalance auction zone is near the low end of the range of about the 6-day base, which is 6106. Okay, that is the level that I had said we would come back and backtest the day we broke down. So we broke down on the 12/18, same day the newsletter was released. And I mentioned that at some point we would come back there, right? And a few days later, to go out 1, 2, 3, 4 days on 12/24, we didn't fully backtest that day. It was actually the day after Christmas that we actually backtested the level. And at that point, that is when, and I'll generate another newsletter, I flipped bearish. I said we could sell off after this. But first things first, backtest mode, right? Why did that backtest mode trade idea come in? Even though we had already sold off, and this was clearly a bearish move. Why did I assume that we would come back immediately after selling off? Well, we did go lower, to be fair. We went a lot lower technically, but the bigger move of this general trend, this massive move that came after this, came off the back of a backtest. The idea that we would come back and move way higher before going any lower. And so this is, again, referencing backtest mode. The philosophy of most of my trade ideas will come off of backtesting. Now, it's primarily derived off the strategy of I am a reversal trader. So there's essentially 3 ways to trade. If you boil it down, there is 1, scalping, right? Or trading ranges, scalping. There is 2, trend continuation trading, right? Waiting for that setup to come in, things to come looking clean. And then there is reversal trading. Each one of these entail their own markets, their own specific regimes for this to exist in order for you to be able to trade. I exist in this realm, and in this realm, my ability to spot opportunity lies in these big moves when there is a huge imbalance away from a standard auction, and I am able to create a scenario within reversal trading to be able to capture moves of this potential or magnitude. So we're going to break that down a little bit more, but this is the initial concept here, just being kind of scratching the surface of what I mean by backtest mode. Okay, so we're just going to do a little side-by-side comparison. You can clearly see there's a lack of a validation point of the 6106. And if we go back to the image that we recently discussed, there are those gaps that I'm referring to. And this is where my opportunity comes, because I have a clear target in mind to be able to take profit into and out of. Now, the difficulty is it requires having targets. It requires having structural integrity to be able to identify, well, where is the entry? Where is the target zone? When we're trading at all-time highs and there is no reference point, that is where this strategy kind of falls short, and it is very difficult to properly execute and find meaningful targets when we're in price discovery, meaning we haven't traded here before. So just to clarify, this isn't by any means a perfect strategy. It does require structural integrity to be able to identify where to look to trade into. But nonetheless, this is what the video is about: backtesting trades and finding entries. They do require some patience, overall understanding of what to look for in terms of criteria in order to validate these trade opportunities. So we're going to break that down into 2 examples. We had a couple of massive trades over the past 2 weeks, given the overall increase in volatility and the ability to spot these backtest scenarios, given a lot of the failed moves have come after the selling has subsided after that big 6-day imbalance. So let's start. Now, just the first ability to identify this opportunity to backtest, we first must begin to reverse the trend. The trend does not reverse until a prior support is reclaimed, or the opposite can be true if we're trading upside. So what that means essentially is the trend will continue to follow until a prior level that was previously support reclaims or is recaptured, okay? At which point, that low that comes from that recapturing of price is going to be the protected low. That is going to be the reference point that must remain intact. It means it should not be taken out or should not form acceptance below in order for us to come back and backtest that open gap. So with that being said, we had the perfect situation here. Once we broke down, right, we had a series of lower lows up until we finally reclaimed and held this prior low that was formed pre-market or overnight. We finally bid that and we back tested a few levels up. The ultimate target was all the way up here anyway, but once this structure forms, meaning we begin to fail to make a series of lower lows and a prior low from the prior lows that were created begins to correct or begins to hold, then this low is your reference point for a backtest trade idea. In this case, this is what started it all. If we were to zoom in a little bit more, you can see that price, as soon as it reversed and reclaimed this overnight level after some period of acceptance, meaning price trading sideways from this zone, we immediately ripped and took out all these lower lows, lower highs that were forming along the way. So that's kind of the preface of the strategy. Really, there is things to discuss that are more in depth, which I will be providing an example of as well. But this is just more of an overview of why reversal trading is my favorite and overall how to structure or look for it. Now we're going to actually dissect an actual trade that we took in the most recent session, which was on January 3rd, 2025. So before we dive into the actual integrity of the plan and kind of walking through it, I do want to give some more background information. I do provide these plans every single day. I will leave my Substack information in the description because these plans are given a days in advance in order to kind of prepare for these moves before they come. I do give a scenario of things that need to happen before we can initiate those kinds of trades. And I give some more context as to why these levels are important and why I believe that there is a squeeze potential or reversal once these levels are reversed. So for January 3rd, I had said a reclaim of 59.24 to 59.17. If we go to the exact chart, you can kind of see that that point is exactly right here, 59.23, 59.17. That was the prior low from a couple days of trading sessions. So there's a series of lows that were forming here. And at which point, just to give a better, cleaner overview, this was when I released the newsletter was January 2nd, this day, right? We had closed at the day at about 9:18. So a few points into the prior 2-day low here. You can see that 12:30 and 12:31, we were making those were the prior lows of the day. Same place we closed on 1/2. And that is the same time that I released this newsletter, that any recapturing of 59.24 and 17. This zone is referenced for some time now, and it has been bouncing and reclaiming for days. If we can form some acceptance between 59.24, 59.17, this could trigger a nice reversal back to the same pin zone we've been in between from 59.42 to 59.83. So this was the criteria, and essentially, that I needed to see in order to validate or trigger this trade. ES would form acceptance between 59.24 and 17. Price would ideally, doesn't have to, this is an ideal scenario, would dip down to 59.08 or so, but no lower than a certain level in order to not sell off further after some acceptance long or failed breakdown of 59.08. Those are the kind of the criteria. These are the targets for that backtest trade. And we're going to kind of dissect what happened that day and where I actually took my entries and ads and the way I scaled. Those were all commented on and provided on the Discord as well. But for now, the structure of the trade, right? That's kind of the purpose of this is backtest strategies for reversal trading. We have a series of a downtrend, right? We have lower high, lower high, lower low, lower high, lower low, right? It's a messy action. Price action is never clean as it looks on as we can draw a general trend, but we have a series of lower highs and lower lows. The idea was the retest or the recapturing, right? Just kind of the preface or overview that I gave earlier, that price will continue to break down until one of the prior levels holds, and then we can begin backtest mode, right? So that was the initial preference, was backtest and reclaim. The reclaim of this zone would begin backtest mode, right? And the backtest target is 606 for this. You can see I have it labeled as backtest on my chart as well, just as a note. The idea is that we were trading lower and lower right? Bears had control. At some point, bears will have to give up control, whether due because their shorts covering or just because bulls are finally putting their feet down and are going to try to squeeze in the other direction, right? Since this is a zero-sum game, bears and bulls are always going at it, and the ability to interpret when that momentum shifts as a reversal trader is very important to be able to identify, to get in at an early point, to be able to maximize the risk to reward of the trade. So we had a move into the zone a couple times on a daily time frame. These are all higher time frame analysis trades. I do not trade or scalp small trades. I look for massive moves within the intraday session, so you'll never find me looking at anything smaller for trade ideas in a 1 hour chart. We had a failed move to the downside, so in other words, we broke down of this general range right here. Bears were unable to hold us below. Bulls came back, reclaimed the zone, right, as referenced on the plan between 59.17 and 59.23. We were there basing all night. And then we began to backtest the lower highs of these zones, which was the 59.83 all the way to 606, where we broke down from and left an open gap, right? We had a base here forming for a period of time, and we did not clean up this gap. In the same way, in the prior example, on the 6-day base on FOMC, we did not break down and clean up that auction or validate that breakdown. So in other words, until this gap is cleared, we are going into this zone potentially to backtest and clean up that auction and validate that breakdown. Now let's get into the actual entries and management. So here's the general context on 1-2, the same day that we had the action near the end of the day. So these times are all timestamped in Pacific time. So Pacific time for the market close is 1 p.m. Eastern's 3. So all the times listed on here on Pacific time, since that's my general time zone. Closing above this area, 59.17 to 20, I will be uber bull into tomorrow / overnight. So here is 1-2. We are about 30-40 minutes before the close. I gave that commentary that I am looking to be bullish into overnight. And essentially what I'm saying is I want to get long overnight and find an entry so that we can set up for the next day. So I am going along small here. This was after the overnight session started. This was about right here, excuse me, at about 4 p.m. We had opened at 3, and about an hour in, we had come back in right here, and I got long at about this zone. So around here, I took a small long. I said I'm taking a small long here, 5916, somewhere around here. And my stop at 5904, all the way down here, right? Kind of below these lows here in case they wanted to ransack some lows. I will add to this more acceptance, 5917. This is the general trade that I gave in the pre-market plan, as we saw in Substack. And I gave my scale zone. My first scale would be 34 through 38. This is me entering the position, kind of giving a general idea of where my entry was, kind of sharing with the group. Scaled someone at 31. So initially, as overnight trade happened, price moved in my favor relatively quickly that night. And I scaled some out here on 31. Once I saw that really strong pop that came out of nowhere at about 612. This looks like it's shaping up for a trend continuation. So I said, I'm going to add some more. So as price kind of digested here, overnight trading relatively sideways here after this little pullback, right? I liked what I was seeing. I said, you know what? I'm going to buy some more. This doesn't look like it's going any lower. So I listed here that I'm going to be adding more at 59.27, which is about here. I added some more, held it into the overnight, kind of gave my general idea as we head into the market open the next day. We were still trading within the same zone. Kind of gave a scenario what potentially could happen if we did run these lows. I still would be bullish. And then after about 30 minutes into the open, market just ripped. And I was still holding the trade from overnight. And it ripped. I scaled some at 49, 59.49, about right here, running this high. A little bit into the open of the session. Market opens at 6:30 Pacific. So 6:40, 10 minutes in. Scaled some more. Scaled more at 74.75. So all the way the hell over here. After a massive leg up. And then after that, I was just left with about 10%. About a few contracts left. And I was looking to target the 84.83. Which was one of the final zones of the plan they had given, right, on the description. So all in all, we had about a 59.16 entry, and I scaled up until 59.88. A total of 72 points from entry to exit, with about 12-point stop loss, a massive risk reward trade here. I kind of give commentary all day here as to what was possible as the market played out. I said I finally closed near 2 hours before the market closed. I'm closing this trade at 59.88, just about right here. I closed it, ran up a few points. Oh well. At this point, I was kind of done, but done for the day given such a massive run up. But yeah, that pretty much encapsulates the recap of the trade, kind of the context of what I've given, an overview of how I find these opportunities as a reversal trader, what reference points I use. They're really just, this is more of an overview than it is an exact instruction manual. It is really just to give a context as to the next series of videos that I'll be releasing, to give more ideas and more color to the ideas of backtesting, reversal trading within a backtest mode, finding those targets and scaling out and managing a trade. So if you like this video, feel free to subscribe. There will be more. I do trade live as well on YouTube, so feel free to join me at any time. If you're interested in the Substack for these pre-market plans, they're posted in the description. I post plans every single day, Monday through Friday, 1 hour into the market close for the following session. And if you want commentary, I do provide it on the Discord for more in-depth comments within the intraday session, just to give more color to all the plans and the way they're playing out and what I'm seeing as prices developing.